I'm Greg Hunter. Welcome to USAWatchdog.com. My next guest, haven't had on in a while, smart guy. He knows a lot about silver, but just in general knows a lot about the markets. He talks all over the world, flown all over the world. He wrote this years ago, the Silver Manifesto, and everything. And the premise of this is still intact. Okay, and then he wrote this, a few years ago, second chance, where you have a second chance to get in on silver. And silver, if you look at silver, all my guests say the same thing. It's going to go exponentially higher than gold will on a percentage basis. It's really a pretty good buy. A few years ago, or a year ago or so, you said, I think that it'll bottom out around mining costs. And sure enough, you were right. Now, it's not very far off mining costs now. David Morgan of the Morgan Report. David Morgan, thank you for joining us today on USAWatchdog.com.
Well, Greg, it's great to be back with you. Thank you.
The silver. It's at 17 and change, and then you could buy it. I guess the Silver Eagle with a couple of $2-3 commission. You're gonna get it around $20 an ounce. Even my former guest, our last guest, Bill Pony, said, "Yeah, silver's the best deal, and plus you don't have to learn anything." Silver, you're the silver guru, the expert on silver, one of the premier world's experts on silver, along with a lot of other financial knowledge you have. But tell me about what you think about silver.
Well, I think it's more important to say what others have said about silver recently. I just did an update, and I hope you don't mind me talking about other shows, but the Kaiser Report, Max Kaiser, and anyone that follows him, and he has a huge following, knows that Max has been pretty much on the Bitcoin story for a long time. And I just did an interview with him a few weeks ago, and he said that he thought that silver would outperform Bitcoin in 2020. I just about fell out of my chair. I really never expected Max Kaiser to say that. The other one that probably carries much more weight than Max Kaiser is Scott Maynard, I hope I'm pronouncing his last name correctly, at the Davos meeting recently. And he was asked by a couple of Bloomberg interviewers what was his number one go-to strategy for 2020, and he said silver. Just said the word, silver. And the interviewer kind of kicked back and said, silver? Why not gold? And Maynard went on to explain that silver was off about 65% from its high, but gold was pushing much more toward its high and was a much better value than gold was. This is, of course, making, shaking up the silver world a bit because, again, and this sounds like the old saw, but relative to all asset classes, I can't think of one that's more undervalued than silver. I mean, if you look at every asset in the metals world, meaning base metals and PGMs, REEs, anything to do on the periodic chart, every one of them has obtained a higher price level than it was in 1980, except silver. So why is that? And we could go into that if you wish, but so I'm in good company. Silver is a place to go, and I just want to be very specific here. I believe and always have that you should have physical precious metals to start, and then if you want to get additional leverage, you go into the mining equities. For example, we had 7 picks in our top tier last year, and all of them were up, Greg. The worst performer was up 43%, and the best was 100%, and that was a silver stock.
This was the Morgan Report. The Morgan Report.
Absolutely. And if you had put, so let's look at last year, 2019 January to 2020 January. So that one silver stock's up 100%. So silver itself went up from 15 last year to 30 this year, meaning 100% gain. There wouldn't be too many silver people screaming about, how bad silver's doing, or the ratio's at 88 to 1 or whatever. And there are others in my field that say, don't ever buy, the equities. You only buy the physical metal. And if that's what you want to do, that's fine with me. I have no axe to grind if that's your belief system. And it definitely is the safest. I'm very, very consistent here. But if you want to gain the next level of risk to reward profile, then you would be in some of these equities and you would have doubled your money in a silver investment. And for those that think they should own silver only, and are unfriendly to the mining sector, then how do you get the silver? It's got to come from somewhere. I mean, if you don't like mining, then you're not going to have any physical silver coming out of the ground whatsoever. So there's a bit of it does grind me a little bit, but nonetheless, that's the proof in the pudding. So, I don't know too many stock pickers out there that in one asset class have picked 7 out of 7, and the average on that grade was 63%, and the S&P was up 29%, and everybody's blowing it out how good the S&P did in 2019, and it did. But the best performing sector, one of the best performing sectors in the entire S&P 500 was the miners. But you're not hearing that in the mainstream news, are you?
Well, no, and then plus, the market overall is juked with, the Fed repo market and everything else. And then you look on the other side of the scale, and they got their thumbs stuck on, the Crimex with gold and silver and the naked short selling, and dumping a half a year's mining supply on in, I don't know, a minute that they don't have. I mean, it's a cartoon, and yet you still had that kind of movement in the stocks. Now, let me get this straight. So you're saying, listen, you should have a base portfolio, a core asset in precious metals, silver, gold, and if you want to take some risk, buy the miners.
Exactly. I'd say for most people, having a hard asset, and I'm not a bullion dealer, that, that's where you begin and end. You say you don't want to overgo in that. I mean, Jim Rickards is very consistent, 10% gold. He's more favorable to gold than silver, but he does recommend to well-heeled people to buy a monster box or two of silver. The point I'm making is that is sufficient for most people. But if you really want to get more juice in your portfolio and you want to remain in the sector, the way to do it is through the miners, because you usually get about 3-to-1 leverage. I just pointed out that, I forget the exact levels gold and silver went up last year, and usually those numbers are in my head forever, but gold was up, I forget, 20%,
yeah.
and so my worst gold stock was up 43%, and my best gold stock was up 74%. So that's a triple. 3 times better than gold itself. And then silver was up very mildly last year, I think 16%, if I remember right, or maybe 13. And yet the silver stock's up 100%. So that's like, 6 times better than the underlying asset. So there is times to be in the miners. There is times to step aside. Most people invest incorrectly in the sector because it's filled with a lot of extremely interesting ad copy about the certain secret formula and the certain secret place with the certain secret gold mine that's never been discovered before, and on and on and on. They're absolute psychological geniuses at getting people to buy into these, what I call penny dreadfuls, or these penny stocks that are usually not worth the paper they're printed on. In some cases they are, and I actually do look at them. But I structured a portfolio to protect people's assets, which means the big money goes into the big companies I just outlined. That's where we put the bulk of
real
our
companies,
funds, real companies.
With real earnings, real stocks.
Absolutely.
Real
Look,
board of directors.
The stock market's supposed to run on earnings. The more, if you own a stock, you own a company, like Buffett says. I mean, I'm not a fan of Buffett, believe me. But nonetheless, he does say you're buying a company. And if you think of it that way, what kind of company do you want to buy? Do you want to buy one that they're like going out of business? Or you want to buy one that's kicking it, that's just making money like crazy? Well, when I go into business, I want to do well. So those are the kind of companies you should strive to own. But most of these people decide that they want to, the story sounds so phenomenal. It's out on this far distant island, and when the wind blows, gold dust falls to the ground. I mean, this stuff is just unbelievable. I've been in this whole thing for over 40 years. So the amount of story stocks I've seen in my career have been, I can't too many to count. And still, even at my age and my experience level, I read some of this ad copy and I want to buy this stuff, and I know what it is most of the time without even having to look it up. But anyway, I digress. Let me come back.
Let's talk about this, about the stock market. You talked about earnings. And I think the mainstream media, the financial news channels, the lying propagandists at the legacy mainstream media, they're in denial. I mean, you have headlines with Xi Jinping that says that he's wearing a mask. He's wearing a mask, and he's talking about let me just get so I don't misquote this. And this is, I mean, there's all kinds of information out there, right? And I just try to get the stuff that I know is just rock solid, right? Rock solid sourcing. I don't know if there's 1,000 people or 100,000 people. The estimates of the deaths are astronomical. They got whistleblowers. They're attacking them over there. That's happening. But, China death count tops 1,000 as masked President Xi Jinping warns prepare for a long and grim virus battle. Excuse me? And then you have the World Health Organization. That was yesterday. Today, WHO, World Health Organization, names virus COVID-19, warns must do everything now. Vaccine will take 18 months. That sounds bad to me. I was actually watching Bloomberg, and I had some analyst say, well, everybody's written off the first quarter. Doesn't China have 40 trillion in debt? Anyway, is this virus is the blackest of black swans, and nobody is even acknowledging that this is going to go on for a while.
Yeah, I do want to comment, and we did a bit of a pre-interview, so thank you. It actually took me a little bit of searching, believe it or not, to find any kind of articles that were like just fact. Most of them dealing with the coronavirus and its financial impact were just happy days are here again. Look at what happened to SARS, nothing. Look what happened to this other one, nothing. They compared it to other outbreaks. Well, I think this one's different. And having said that, the song and dance we're getting at this time, I think it's going to change drastically, was, don't worry about it. Stocks are fine. But here's one from The Guardian. I'll cite it, and I'll go through pretty quickly. But on the supply chain side of things, the Airbus has stopped production in China. They build about 6 A320 aircrafts a month. Other manufacturers have halted China production are Toyota, General Motors, and Volkswagen. The South Korean car maker Hyundai has halted production lines because of disruption in the supply chain of parts. Honda has 3 plants in Wuhan, the city where the epidemic started. GSK, one of Britain's drug makers, and I want to come back to this and remind me, Greg, if I forget, on the pharmaceuticals. One of Britain's largest drug makers says medicine packaging facility employs about 100 people has remained closed. Apple, we all heard that with Foxconn. They're on hold. A lot of areas. On the Chinese market, Nike has closed half its stores. Adidas says it closed a considerable number of outlets. Gap and Hugo Boss have closed stores in shortened hours. Disney said its operating income to take a hit of $280 million. IKEA has closed 30 stores in China. McDonald's has closed 300 restaurants. Starbucks has shut down 4,100 cafes. Burberry said it will speak out of the crisis, but derives more than 60% of its revenue from China. Tata Motors is warning a group of that will have a wide impact. Let's see here.
Well, listen, we got the picture.
I mean that's the facts. And of course, Cathay Pacific, the airlines, and everything else. So
27,000 laid off.
This is the real world. So forget the stock market. I've said for the last 3 years, I think pretty consistently, that the financial markets have nothing to do with the physical economy anymore, which is really a shame. But that's the truth.
But you're thinking that this could turn into, or is turning into, something worse. I don't want to put words in your mouth, but I mean, if you look at the objective evidence, this is going to be a disaster, not just for China, but all the American and European countries manufacturing stuff there. Is it not?
Yeah, I'll try. I'm probably going to misquote Ayn Rand, but basically you can ignore the reality, but you cannot ignore the consequences of ignoring that reality. Sooner or later, the reality is going to hit the stock market. I don't care how much funny money they pump it up. When you don't get goods on the dock that you can distribute, so something's got to give. And this is taking place as we speak, only in my view, to get worse. No one really knows the impact at this time exactly. We know the trend, and the trend is it's exponential. If you've got an R naught factor above 2, when one person can affect 2, 4, 4, 8, 8, 16, it's exponential, Greg, as you know, which means until this thing burns itself out one way or the other, then we've probably got worse days ahead of us, not better days for a while. And I'm just being realistic here, but to sit there and make these articles up that everything's fine, ho hum, Look at the past outbreaks. It didn't affect the markets whatsoever. Well, that is true. They had very little impact, but none of them, in my studied opinion, have the impact that this one is currently having and will have further down the road. So, yeah, I don't think they're exempt, in other words.
Well, warnings are coming from the Fed. And the
Yeah.
Fed has this repo cartoon going on where they took over the repo market, and nobody's like, no big deal. None of the banks will loan each other money. Isn't that a problem?
It's a huge problem. In fact, I got an article here that I wouldn't mind reading. Excuse me, folks, but so this, you could go further on this than I'm going to go. This will give you a bit of an idea
Just
here.
give us the headline in a couple of sentences.
Okay, well, this guy named Zoltan Pozsar is one of the best known, okay?
Yeah.
And so just to go through it's a paragraph long, but it's a quote, and I'll quote him here. He mentions the foreign exchange market being probably the big problem within the repo market. And he does mention JP Morgan appears to be gearing for a collapse in the foreign exchange swap market with very specific intention to force a market crisis in the coming days and force the Fed to launch a full-blown QE4, not just a monetization of T-bills. Pozsar explains foreign exchange swaps could end up as the orphan asset class without an obvious backstop, and that may force banks in some parts of the world to the edge of the proverbial abyss. So I'll leave it there. You can look him up. Very smart guy. I read about 4 of his articles before.
So you're saying that he's forecasting they're going to go massive overt money printing to say we're doing something. Is that what you're telling me?
Yes. And at some point, people, not just the financial, well, at some point, not only people, but the financial markets, the population at large, whether you're in the financial industry or not, realize they're just going to keep printing until this stuff isn't worth anything. And once that psychology catches on, then the velocity of money picks up. And people say, I got to spend this because tomorrow it's worth less than it was today. And that's something the Fed really has no bank has control over that. They can control, the reserve requirements. They control, they can flush the repo market. They can open up another facility that the Treasury has for this, what's it called? Sorry, I had to write it down. Supplemental financial program where they pump extra reserves into the Treasury. I mean, a lot of stuff's going on. They have a lot of tools, but they can't control what people think about how much value that money is going to have in the future. The other part of the foreign exchange market is, what if you don't really want to take yuan in exchange because you're worried about, what the Chinese market looks like?
Oh,
it's rated too high. So, when you think about foreign currencies or currencies in general, the U.S. isn't exempt from this. It just happens to be the top dog because it's the reserve currency. But it's like a ticket at the county fair that comes in, that comes to your town. It sets up. You go there. It's a 1 week long situation. You buy your tickets. You take your ticket. You get on a ride. You buy popcorn. You play a game, and then it leaves. So whatever tickets you have left after that carnival leaves town is absolutely worthless until that comes back. I mean, that's the way the foreign exchange markets work in a very rough metaphor. But what I'm trying to say with this metaphor is that not every bank has the ability to print money ad infinitum like the Federal Reserve does. I mean, the Europeans can't really just pump. They do pump euros, but not to the degree or clout that the Fed has. So I hope I'm not confusing anyone, but basically it all turns down to something very simple. Print, 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 print until people stop accepting it as valuable and realize whenever you have a lot of anything, its value decreases. And this is what we're facing. In the interim, you could see the dollar do quite well because of this foreign exchange swap problem, where all of a sudden you need dollars to settle your balance of trade, and your yuan isn't worth as much because people are afraid for one reason or another. So now you've got a foreign exchange swap that is putting pressure on one side or the other. So there's a lot going on. It's complicated. I'm not trying to make it complicated, but look, the bottom line is pretty simple. It's all based on trust. The banks don't trust each other for overnight loans. That's what a repo market is. There is extended ones. I know that, Greg, and I know you know that. But for the most part, the repo market is a loan for 24 hours so that the bank that doesn't meet the reserve requirements meets it for those 24 hours. and it's done.
Yeah,
End
well,
of deal.
and then on top of that, the Fed has extended it.
Yes.
Which why are they doing that? Because they can't pay the money back.
And they don't trust each other either. I mean, there's a lot going on behind the scenes that we don't know. But when Powell comes out and says, the coronavirus is something
Yes.
that they're going to handle, what he means is they're going to flood the market with funny money. Again, I repeat, but it's important for people to get it because I've said this for years and it looks like it may happen this year. I don't know. But at some point, somewhere, someone says that's enough. Enough is enough. And that money isn't trusted anymore.
Yeah.
And it could start in the foreign exchange markets, it could start in a bank, it could start in the bond market, it could start with someone, not getting delivery on a gold deal. I mean, there's lots of places where that spark could happen. I mean, as you said, this black swan does affect the financial markets, even though everyone's putting on this happy, smiley face and don't worry about it. Look at how good the markets are. Yeah, we're looking.
It's the Forrest Gump axiom I've been saying to my folks for a long time. We're going to reach a point where, just like in the Forrest Gump movie, it happened over and over again, and then one day it was over, just like that. Right? And then two things. So all this money printing, silver, gold, tangibles, what your car title. I mean, all this money printing means that tangibles go higher because you can't print a car. You can make a car. You can't print an ounce of gold. You can't print an ounce of silver.
Yeah.
You can't print a silver mine.
That's right. Well, on the Weimar Republic, which is probably the best written about hyperinflation, people that saved their whole lives to have like a whole life insurance policy. So in those days, there weren't the like 401ks and pensions and all the stuff that what we are, familiar with today. They would buy a life insurance policy, and some of these people had cashed out their life insurance policy out during the hyperinflation to buy one stamp to mail a letter. I mean, think about that. Everything you save for 30, 40, 50 years is now worth buying one postage stamp. Now, I'm not saying we're getting that bad, and I know we won't. The bond market has a deflationary effect when people want to run from the dollar. So it's going to be rather chaotic, in my view, if, or should I say when, the markets start to rebalance. People use the word reset, the financial system. And that can happen on its own. I mean, the banks have a lot of control. And, the system is set up right now where banks control governments. But when governments control banks, we have a different system. And this is something that, even some have inferred could be the case for the Trump administration. I'm not a big Trumpster. I mean, but I prefer him over the alternative, regardless.
Yeah, the Marxist.
Regardless,
Hillary Clinton, the criminal.
Kennedy tried to return the system back to where the government controlled the banks, and he paid a very big price for that. But the Treasury is really supposed to be in charge of the money, not the Federal Reserve, a private, banking cartel. But anyway, I digress again. But lots could happen in the future, and it's very uncertain. Markets hate uncertainty, and yet they're humming along just fine with all this uncertainty out there. How long will it last? That's what I'll ask. How long will that last?
And you're saying that you could take these foreign banks, a lot of people think the problem will happen overseas, take it to the edge of the abyss. What could happen overseas that could end up smacking us, with a pie in the face?
Well, so many things. I mean, one is someone could need to cash out their U.S. dollar portfolio because they need to make a payment to a foreign country, as a quick example. And that amount is rather large compared to what they normally do. So this is like in the movie Rollover, where all this money has interest on it, and that interest is in, billions of dollars, even though the interest rates are only at 1.58% or whatever. But when you're owning, trillions of dollars in those assets, you're talking billions in interest. And so what happened in the Rollover movie is that interest would roll over, and that would be reinvested into more U.S. debt to keep everybody happy. Let's just keep this game going and pretend it could go on forever. Except part of that rollover money was moving into gold. And every month that the rollovers came due, some of it was siphoned off and moved into the gold market. And that happened month after month after month. And let's say a forensic type like Catherine Austin-Fitz and Dr. Skidmore did they looked into it pretty deep and discovered that, hey, these Arabs are buying gold. They don't trust the dollar that much. They're moving some of their rollovers into the gold market. And once that news was let out in this hypothetical movie, all hell broke loose. And so that's just an example. That one was hypothetical, but you could see a situation in the real world where some type of payment was reneged on, or they had to take so much money out of a market quickly, or they couldn't make the foreign exchange requirement that they needed, so they had to start bidding up or down a certain currency to get acceptance on both sides. I mean, this is a bid-ask system. It's mostly computer controlled. It's mostly run by algorithms. It's mostly computer to computer. But nonetheless, it's the real world that we're in. And things that are complicated or complex have a greater probability of going awry than things that are very simple. That's why I still like, as old-fashioned as it's become, hard money, when you got real physical, silver and gold in your hand, you don't need your cell phone to make a transaction. Follow my drift.
Yeah. And are we getting with this coronavirus? It's put the path like the exponential growth in infections. Are we hitting the exponential curve here, where time is going to run short, really short? Because I don't see an end to this virus, this shutdown, this carnage in China, and all the American companies over there, all the European companies, you name it. Do you think this is going to be expediting the snapback, the reset, the day of reckoning?
I think so. I want to be honest with my answer. It's just my opinion. But I've said for years there's so many black swans flying around. One might hit the other. I think this is a black swan event, whether or not it was, coming out of the it was man-made or not. There's some talk about that. There's
doesn't
some
make any difference.
It's here, right?
Yeah.
I think that's what we have to look at, as that reality. And yes, I think that black swan has multiple facets, multiple tangents that will affect markets, not only markets, but let's say psychologies. I mean, how many people are going to want to go on their vacation to China? I mean, what happens to the Olympics in Japan? There's a lot of things out there that people haven't thought of yet that will probably be apparent a month from now that will deter the current way we quote unquote do business. And I don't mean business alone. What I mean is the way we approach daily activities, perhaps. We really don't know the full compound effect, but it is exponential, and it will expedite it, as you suggest, Greg. We will have, this is part of the reset as far as I'm concerned. Whether or not it has a dramatic effect on the financial system as a rebalancing or not remains to be determined, but I think it will. And that alone will reset or rebalance how people think about, what they can do, what they need versus what they want, what's important versus what's really not important. Is your social media, page up to date, maybe take a back seat to how many carrots you can grow in your backyard. And I'm not being facetious. I think, there's going to be a readjustment on more of a spiritual level, I think, than we've seen in a long, long time.
Your Morgan report, excellent work. You didn't tell me that in pre-interview. You had 7 out of 7 on the stocks, but tell me about your Morgan report. And you said you were going to, entice people by giving away something free for people here at USA Watchdog. What's going on? How can people get a hold of your report? Sure. And what are you giving away? Incidentally, so people know, I don't get anything. We're not in business. I like David Morgan very much. I have him on because I like him. He's not paying me for this. Okay, so just so you all know, and nobody ever does whenever I promote their book or their website or whatever. But anyway, what do you have for people who are USA Watchdog followers?
Well, two things, really. First of all, just go to themorganreport.com, which is our main landing page, and give me an email address, a name and an email. You'll have to verify it's you, and you can get on our free newsletter, which isn't the Morgan Report, but I do a weekly update like you, Greg.
That's nice.
But it's all financial. And I source it. I put up, it's actually a video and a podcast. So I source, usually it's pretty mainstream stuff. Sometimes it's alternative. And then I usually comment on the precious metals at the end because that's what everyone expects me to do, and I like to do it. So I try to keep it around 15 minutes or less. I can be long-winded at times. Just, I mean, so many articles, and these are, a lot are like Reuters or Bloomberg or
Good sourcing.
CNBC, good source. So that's number one. If you want to go a step further, you go to the subscribe tab on the website, and there's an outline of what you get in the Morgan Report. And we do, offer, your money back on it. Basically, if it's not for you, it's not for everybody. I would say anyone that has never bought a financial investment newsletter. That's what I produce, a financial investment newsletter. If you've never bought one before, familiar with one, mine would not be the one to start with. But if you've been with, some of the better knowing publishing houses like Agora or Stansberry or others, you'll know exactly you'll have an idea of what we do, and you can rate ours versus the others. And I see many of them, so I have a very good idea. And if you sign up with the word Hunter in the coupon code, HUNTER, what I'll do is I'll give you 15 minutes of my time. I charge $500 an hour for consultations. So I will, after you sign up with Hunter, I will send you a software that you can schedule called Calendly. You can schedule a 15-minute call for me, and I will guide you personally, myself. It won't be one of my staff. It will be me to help you get started on a right foot with the Morgan Report. How's that?
That's pretty good. And then you also, you were telling me in the pre-interview, you have a no question.
You get to try it for 60 days. Yeah, by law, you have to have 30 days, and we allow 60.
Wow.
So you get a pretty good look if you,
Don't like it.
this, yeah.
No complaints, no problems. Here's your money back. Goodbye. Right?
Yeah.
Okay. David Morgan, themorganreport.com. Is that right? That's the correct. Themorganreport.com is your website? That's correct.
Yes.
And of course, that's where you get the Morgan Report with David Morgan. Very interesting talking about the Forex market, the currencies. There are so many ways for this to go sour. There's just so many ways. So, I always say get ready and stay ready. And one of the best ways to do is have physical stuff. And you need some metal in your portfolio if you can. If not, buy a set of tires, buy some food, pay off your car, right?
Yes.
So, David Morgan, thank you for joining us today on USAWatchdog.com.
Thank you, Greg. I appreciate it.